I'm pleased to be here with Zo Rahim from Cox Automotive. Zo, what is your actual title?
I am a Senior Manager of Economic and Industry Insights.
All right, so we get to talk big picture here on what's going on in the wholesale industry and all the different factors involved there. Well, let's just start out. I mean, what does 2026 look like? Manheim Index is holding pretty firm, or what's the
Yeah, index holding pretty firm. When we look big picture around the wholesale market, big expectation for this year is steadiness.
Yeah.
We're not really expecting wholesale volumes to grow. Pretty flat on a year-over-year basis, but it's the subcomponents where we're starting to see some changes.
Yeah.
So we're starting to see, or we'll see this year, a pretty material increase in off-lease volumes entering the wholesale market, which is great for that level of supply, especially that age of vehicle coming into the wholesale market, supporting dealers and supporting transactions that way.
Yeah.
And speaking of dealers, we will anticipate to see a decrease in wholesale volumes actually on dealers as they really look and strategize on their acquisition strategy for assets, not just looking at the wholesale market. But still, dealer segment will remain the largest overall segment.
Okay.
But where we see growth happening is on the off-lease side.
Generally, when I hear an influx into the market, it's not a flood, right? I mean, because then I'm fearful of values just kind of cratering, but that's not the case.
No, yeah, absolutely not. It's not what you would call a flood, or maybe 10 years ago people were talking about the tsunami of off-lease vehicles.
Oh, yeah.
So blast for the past. But no, we're not anticipating that at all. Like I said, overall wholesale volumes will be flat on a year-over-year basis. It's just the subcomposition that's going to change.
Where are we at on the Manheim Index? It just went nuts in 2022, right? And we're back down to earth. Would you call it normal? I mean, or what does it look like compared to like 2019 at this point?
Definitely normalizing on just overall wholesale prices. As you mentioned, things did get pretty interesting post-pandemic, especially even during the pandemic. But we are starting to get a little bit more normal as overall used sales are stable, used retail sales and demand is stable, and of course, with wholesale volumes being fairly flat, we're not really anticipating any sort of abnormal or unseasonal changes in wholesale prices.
Good looking market from what we can tell, and you don't know the nature of a black swan as we can't tell what it is, so there's that. How do you see tariffs? I mean, that was the black swan event that seemingly we're still trying to figure out how it's going to get passed down into wholesale, but any thoughts on tariffs in general moving forward?
Yeah, so on the fleet side, where we saw some movement last year or late last year was some what we would call pull ahead sales into the fleet channels, especially rental, as some of these companies probably wanted to get ahead of any 2026 price increases.
Yeah.
So we did see some pull ahead demand there, which might impact overall aggregate demand this year. And so if sales do come in down on a year-over-year basis or flat on a year-over-year basis, that's not necessarily a bad thing. It's just that we saw a more of an uptick last year. And so depending on what happens with transaction prices this year, you could still hold sales pretty steady, but we can also see some sales, depending on the segment, come down on a year-over-year basis, which necessarily isn't a bad thing.
Oh, sure, okay. Well, looking at segment, EVs are finally starting to come back, like off-lease EVs, I guess, right? And the off-lease consumer EVs, I suppose, or fleet and consumer, or?
Yeah, so most of it will be consumer. Off-lease vehicles.
Yeah.
But I mean, when we think about growth opportunities in the wholesale market and the used vehicle market, it is around EVs. We're going to see a pretty significant increase in 2026 and 2027 in off-lease EV vehicles. And the good thing is that these are newer vehicles, right? These aren't the EVs from a decade ago. These are the latest battery technologies, the latest overall technologies, the latest in-demand vehicles for EV enthusiasts or even consumers interested in EVs. So as adoptions increase, and even though there is a pretty substantial, significant increase in EV off-lease, we still expect that there's going to be sufficient demand to support those volumes coming in.
Right. Well, and that's been a really big question mark when it comes to EVs. And yes, there's cost savings on maintenance and operational costs. But the used values, the residual values have always been a big question mark and not that great. How do you see that moving forward?
Yeah, so the good thing is as demand increases for EVs, especially in the used vehicle side, we do anticipate depreciation slowing as there's higher levels of demand, trying to find those vehicles and get those vehicles in the used vehicle market. So we do anticipate, because there's sufficient enough demand, that you'll support prices for EVs there. And it won't be how it was in the past where you had very high levels of depreciation. That's also because the product mix was slightly different.
And we've got a much more mature market, and with diversification of EV product, I suppose that helps too. I mean, it was primarily what happened with Tesla happened to, writ large to wholesale.
Yeah. So the product mix also helps. Overall, general EV adoption and awareness has increased over the last 4 or 5 years. So that also is very supportive of sales, transactions, as well as prices.
Okay. And why don't we just close out on your view into maybe even a little further out? It's always hard to predict, but do you see any warning signs that consigners might need to be worried about, or?
Yeah, I think it's just general economic conditions, what's going on with households, what's going on with the business environment. I think those are the things that we're looking at. Of course, people talk about the bifurcated consumer or the K-shaped economy. There's some, of course, uncertainty still around monetary policy or fiscal policy that could change, especially around tariff and trade uncertainty. But overall, we are expecting, as I mentioned with wholesale, a very steady market. When we look at our used vehicle forecast for this year, we're expecting it to be slightly flat or slightly down, less than a percentage. Same with the used retail market, flat, slightly down, less than a percentage. Wholesale volumes, flat. So we're not really anticipating any sort of major movement up or down. It's more of a steady environment and a very stable market.
Well, and it seems like it would be stable moving forward when SAR on the new car side looks to be, we're not hitting any ramps to go up to 17 million, that's for sure. So that's going to keep the wholesale market at a comfortable number and not a flood in the next couple of years. Yeah. Great. Well, thanks a lot. I appreciate your time today.
Of course.
All right.
Thank you.
Yep.